March 10th, 2023. Silicon Valley Bank fails. You wake up that Friday morning, check your phone. Your bank, the one holding your business payroll, your operating account, the money you need to make rent next week, is gone. Not having problems. Gone. Seized by regulators. Doors closed, website down, app not working. You have $180,000 in that account. FDIC insures $250,000, so you should be fine. Except you can't access it. Not today, not tomorrow. Maybe not for weeks while regulators sort out the mess. Your employees need to be paid today. Your landlord expects rent on the 1st. Your vendors have invoices due. You have money. But you can't touch it. This actually happened to thousands of businesses in March 2023. Not a hypothetical. Real people, real companies, real panic. Some of them had backup plans, cash in other banks, lines of credit they could tap, alternative payment methods. Most didn't. They assumed their bank would always be there because banks are safe. They're insured. They don't just disappear overnight. Except they do. SVB proved it. And SVB won't be the last. So here's the question. When your bank doesn't work, not if, when, what actually saves you? Cash, crypto, gold, different bank accounts, all of the above? This isn't about paranoia. This is about practical redundancy. Having backup systems so that when one thing fails, you're not completely screwed. Let me walk you through what actually works, what doesn't, and how to build a resilient system that protects you without requiring a bunker and tinfoil hat. First, let's be clear about what we're protecting against. Not the end of civilization, not Mad Max scenarios, not zombie apocalypses. We're protecting against realistic failures that have already happened or are likely to happen. Bank failures. SVB, First Republic, Credit Suisse in the past 2 years alone. More coming. Payment system outages. Visa went down for hours in 2018, caused chaos globally. Could happen again, could last longer. Cyber attacks, banks get hacked, payment processors get compromised, your access gets frozen while they investigate. Account freezes, mistaken fraud alerts, automated systems flagging legitimate transactions, government seizures, right or wrong, currency crises. Your dollars don't disappear, but they lose purchasing power fast. Inflation, devaluation, loss of confidence. These aren't theoretical. These are documented events that have happened recently and will happen again. Your backup plan needs to cover these scenarios. Not all of them perfectly, but well enough that you can function for days or weeks while systems restore. Let's start with the most obvious. Cash. Physical cash in your possession, not in a bank. In your home, in a safe, hidden somewhere secure. How much? The standard advice is 1 to 3 months of expenses. If your monthly burn rate is $5,000, keep $5,000 to $15,000 in cash. That sounds insane to most people. That much cash at home? What if it gets stolen? What if there's a fire? Valid concerns, but compare that to, what if my bank fails and I can't access any money for 2 weeks? Which scenario is more likely? Bank failures have happened. Home safes getting robbed while you're home are statistically rare if you're not advertising that you have cash. And you can mitigate the risks. Good safe, bolted to the floor, hidden location. Home insurance covers cash up to a certain amount, split the cash across multiple hiding spots. Is it perfect? No, but it's a functional backup when digital systems fail. The advantages of cash. Works everywhere. No internet required, no electricity, no payment processor. As long as the other person accepts dollars, you can transact. Instant liquidity. No waiting for transfers, no 3-day holds, no pending transactions. Hand over cash, transaction complete. No counterparty risk. You're not depending on a bank being solvent, a payment network being online, or an exchange processing your withdrawal. You have the money physically. Privacy. Cash transactions leave no digital trail. Not for illegal activity, for normal transactions, where you don't want every purchase tracked and analyzed. The disadvantages of cash, theft risk. If someone breaks in and finds it, it's gone. Unlike bank accounts, there's no insurance that makes you whole. Fire risk, cash burns, floods destroy it, physical disasters can wipe it out. Inflation risk. Cash loses purchasing power over time. If you're holding $15,000 and inflation runs 7%, you lose $1,050 in purchasing power per year. Limited utility for large transactions. You're not buying a car or house with cash from your safe. It's for immediate expenses, not major purchases. Opportunity cost. That $15,000 could be invested, earning returns. Instead, it's sitting there earning zero. So cash is good for short-term emergencies, payment system failures, immediate liquidity needs. Cash is bad for long-term storage of wealth, protection against inflation, large purchases. Recommendation: keep 1 to 2 months of expenses in physical cash. Small bills, 20s, 50s, some hundreds. Store securely. Rotate it occasionally so bills don't get too old. This is your "the bank is down and I need to buy groceries" fund. Now let's talk about gold. Physical gold, not gold ETFs, not gold futures. Actual coins or bars you can hold. Gold's advantage is that it's held value across thousands of years. Civilizations rise and fall, currencies come and go, gold remains valuable. During currency crises, hyperinflation, systemic banking failures, gold preserves wealth when paper currencies evaporate. Venezuela, Zimbabwe, Weimar Germany, all cases where people holding gold survived while people holding currency were destroyed. So gold is insurance against currency failure, not bank failure, not payment system outage, currency failure. If the dollar loses 50% of its value over 3 years, gold probably doesn't. It fluctuates, but over time, it tracks the debasement of currency. The advantages of gold: inflation protection. Gold tends to rise in nominal terms when currencies debase. Not perfectly, not immediately, but over time. No counterparty risk. Physical gold you hold is yours. No bank can freeze it. No government can easily confiscate it, though they have historically. We'll get to that. Global recognition. Gold is valuable everywhere. Language doesn't matter. Currency doesn't matter. Everyone knows gold has value. Portability of wealth. A kilogram of gold is worth about $65,000 and fits in your hand. You can move significant wealth in physical form. The disadvantages of gold: not spendable. You can't buy groceries with a gold coin. Most vendors don't accept it. You'd have to convert to currency first, which requires finding a buyer. Storage and security. Gold is valuable, which makes it a theft target. You need serious security, or you need to pay for vault storage. Premiums and spreads. When you buy gold, you pay above spot price. When you sell, you get below spot. The spread can be 5 to 10%, which eats into returns. Volatility. Gold's price swings significantly. It's not stable. It's not cash-like. It's a volatile asset that preserves value over long periods but fluctuates dramatically short-term. Confiscation risk. Governments have confiscated gold before, US in 1933. Could happen again in a major crisis, though enforcement is harder now. So gold is good for long-term wealth preservation, currency crisis protection, generational wealth storage. Gold is bad for daily transactions, short-term stability, immediate liquidity without conversion. Recommendation: if you have significant assets, let's say net worth above $250,000, consider holding 5 to 10% in physical gold, not as an investment, as insurance against currency failure. Store it securely. Use a mix of home storage, small amounts, and professional vault storage, large amounts. Understand you're paying for insurance, not trying to make money. Now let's talk about cryptocurrency. This is controversial. Some people think crypto is the future. Some think it's a scam. Let me give you the practical reality. Crypto, specifically Bitcoin, Ethereum, and a few other established coins, functions as a decentralized alternative to the banking system. No bank required, no payment processor, no government control. Peer-to-peer transactions using math and cryptography. The advantages of crypto: censorship resistance. No one can freeze your Bitcoin wallet, assuming you control the keys. No government can easily seize it. No bank can block your transaction. Borderless. Send Bitcoin to anyone, anywhere, instantly. No wire transfer fees, no currency conversion, no permission needed. Programmatic scarcity. Bitcoin has a fixed supply, 21 million coins, ever. Unlike fiat currency, they can't print more. This makes it inflation resistant in theory. 24/7 access. Banks close. Crypto markets never do. You can transact anytime, anywhere, with internet connection. The disadvantages of crypto: volatility. Bitcoin went from $69,000 to $16,000 in 2022, back to 40,000 plusers in 2024. Massive swings, not stable store of value, short term. Complexity. You need to understand wallets, private keys, security practices. Mess up, and you can lose everything permanently with no recourse. Regulatory risk. Governments can ban exchanges, restrict on-off ramps, make it difficult to convert crypto to fiat. They can't stop the network, but they can make it hard to use. Dependence on internet and electricity. Crypto only works if you have power and connectivity. In a true grid down scenario, it's useless. Limited acceptance. Very few vendors accept crypto directly. You usually have to convert to fiat first, which means using an exchange, which reintroduces counterparty risk. Security threats. Exchanges get hacked, people get phished. SIM swaps allow theft. Holding crypto securely requires technical knowledge. So crypto is good for escaping banking system control, moving money across borders, protection against currency debasement, long term, accessing funds when banks are frozen. Crypto is bad for stability, ease of use for non-technical people, operating without internet, immediate acceptance at point of sale. Recommendation: if you're comfortable with technology, hold some crypto, maybe 5 to 15% of liquid assets. Use it as an alternative system, not your primary system. Store it properly. Hardware wallet, not on an exchange. Back up your seed phrase securely. Understand this is high risk, high reward insurance. Now let's talk about the boring stuff that actually matters most. Multiple bank accounts. This is less sexy than gold and Bitcoin, but it's more practical for 99% of scenarios. If your bank fails, having accounts at multiple banks means you still have access to money while the failed bank gets sorted out. Silicon Valley Bank customers with backup accounts at Chase or Bank of America or credit unions, they were fine. Annoying, but fine. SVB-only customers, screwed for weeks. The strategy: spread money across at least 3 institutions. One major national bank, Chase, Bank of America, Wells Fargo. These are too big to fail banks. If they go down, the entire system is going down, in which case your problems are bigger than bank choice. One regional or online bank, Ally, Marcus, regional banks. Different risk profile than the majors, often better interest rates. One credit union. Credit unions are member-owned, different structure than banks, less likely to take the same risks. NCUA insured like FDIC. Split your cash across these. No single point of failure. Also consider business versus personal. If you have a business, keep business and personal funds at different institutions. Business bank fails, personal account still works. Joint versus individual. Some money in your name only, some joint with spouse. Protects against account freezes targeting one person. Checking versus savings versus money market. Diversify account types. Different rules, different access patterns, different protections. This is boring, it's not exciting. But it's the single most effective protection against bank failure. Cost, 0 or minimal. Benefit, massive. Now let's put this together into an actual system you can implement. The goal isn't perfect protection against every scenario. It's practical resilience that covers the most likely failures without being so complicated you won't maintain it. Tier 1, immediate access, 1 to 2 weeks of expenses. This is your the system is down right now money. Physical cash, $2,000, $5,000 in small bills, stored securely at home primary checking account. 2 to 4 weeks of expenses in your main bank. Backup checking account, 1 to 2 weeks expenses at a different bank. Credit cards from different issuers, paid off, ready for emergency use. Why this tier? If your primary bank goes down, you have cash for immediate needs in a backup bank account. If payment systems go down, you have physical cash. If both banks have problems, you have credit cards from different networks. Tier 2, short-term reserves, 1 to 3 months expenses. This is your the problem is lasting longer than expected money. High yield savings, 1 to 2 months expenses at an online bank, Ally, Marcus, etc. Money market account, 1 month expenses at a credit union. Treasury bills, 4-week or 13-week T-bills that mature regularly, providing liquidity. Why this tier? If the immediate problem extends beyond a week or 2, you have reserves that are still in the traditional system but diversified across institution types. T-bills are backed by government, different risk than bank deposits. Tier 3, medium-term protection, 3 to 6 months. This is the system is seriously broken, and this will take time to resolve. Money, physical precious metals, 5 to 10% of liquid net worth in gold, silver coins. Cryptocurrency, 5 to 15% of liquid net worth in Bitcoin, Ethereum. If you're comfortable with it, bonds or TIPS, inflation-protected government bonds. Why this tier? If we're in a prolonged crisis, banking system instability, currency debasement, systemic payment failures, these assets provide protection that's outside the traditional banking system, or protected against inflation. Tier 4, long-term wealth preservation. This isn't emergency money. This is making sure your wealth survives systemic changes. Real estate, if you can afford it, property you own provides shelter and inflation protection. Stocks, diversified portfolio and companies that can raise prices with inflation. Retirement accounts, 401k, IRA, keep these funded, but understand they're locked up short term. Why this tier? Cash and cash equivalents lose value over time. You need real assets that maintain value through inflation and currency changes. Let me give you specific numbers for someone with $100,000 in liquid assets. Tier 1, $7,000, $3K cash, $2K checking primary, $1K checking backup, $1K credit available. Tier 2, $25,000, $15K high yield savings, $10K money market T-bills. Tier 3, $18,000, $8K gold, $10K crypto if comfortable, or more gold, silver if not. Tier 4, $50,000, real estate equity, stocks, retirement accounts. This gives you multiple layers. If banks fail, you have cash and backup accounts. If it's prolonged, you have metals and crypto. If currency devalues, you have real assets. Not perfect, but resilient. Now let's talk about what doesn't work. Keeping everything in one bank, single point of failure, don't do this. Keeping everything in cash, inflation eats it, theft risk too high. Impractical. Keeping everything in crypto, too volatile, too complex, Too dependent on technology working. Keeping everything in gold, not spendable. Conversion friction, better for long term than short term. Assuming FDIC insurance means you're perfectly safe. FDIC insurance is real, but access can be delayed. In a systemic crisis, the insurance fund is insufficient and requires government backstop, which means money printing. The right approach is layered, different assets for different scenarios, different time horizons, different risk profiles. Boring but effective. Now let's talk about operational security, because having the right assets means nothing if you can't access them securely. For cash, good safe, bolted to floor, fireproof if possible. Don't tell people you have it. Split into multiple hiding spots if amount is large. Rotate bills occasionally to keep them fresh. Document serial numbers in case of theft, stored separately. For bank accounts, strong, unique passwords for each bank. Two-factor authentication enabled, separate email for each financial institution. Monitor accounts regularly for unauthorized access. Keep hard copies of account numbers and contact info. For precious metals, small amounts at home and hidden safe. Large amounts in professional vault, allocated storage, not pooled. Insurance for home storage. Keep the purchase receipts in separate secure location. Don't advertise that you own it. For crypto, hardware wallet, ledger, Trezor, for significant amounts. Never keep large amounts on exchanges. Backup seed phrase, multiple copies, stored securely in different locations. Never share seed phrase, never enter it into websites. Use a dedicated computer for crypto transactions. If possible, general security, separate email addresses for different financial institutions. Password manager with strong master password, regular credit monitoring. Freeze credit when not actively needing it. Shred financial documents before disposal. This might seem paranoid. It's not. It's basic operational security for valuable assets. Think about it. You'd install a security system if you had $100,000 in jewelry at home. You have more than that in digital assets. Protect them accordingly. Let's walk through specific scenarios and what your resilient system does. Scenario 1. Your primary bank fails on Friday. What happens? Wake up, bank app doesn't work. Website says currently unavailable. News confirms bank seized by FDIC. Your $50,000 in checking is frozen. Your response? Use physical cash for immediate needs. Gas, groceries. Pay bills from backup. Checking account at different banca. Transfer money from high-yield savings to backup checking. Use credit card for larger purchases, file FDIC claim for frozen account, continue normal life while regulators sort out the failed bank outcome. Annoying, but manageable. No catastrophic impact. Scenario 2. Payment networks go down for 24 hours. What happens? Visa, charged MasterCard processing fails, can't use debit or credit cards, ATMs offline or not dispensing. Digital payments, Venmo, PayPal, not working. Your response? Use physical cash for all purchases. Postpone non-essential purchases. Write checks if vendor accepts them. Wait for systems to restore. Outcome? Inconvenient, but your cash reserves get you through. Scenario 3. Your account gets frozen due to suspected fraud. What happens? Bank's automated system flags legitimate transaction as suspicious, so freezes your account for your protection. Can't access money while they investigate. Could take days or weeks to resolve your response. Use backup bank account for immediate needs. Use credit cards from different issuer. Call bank to start dispute process. Transfer money from other accounts to cover bills. Continue functioning while primary account is frozen. Outcome: frustrating, but you have redundancy. Life continues. Scenario 4. Inflation accelerates to 10% plus annually. What happens? Groceries, gas, rent, all increasing rapidly. Your cash savings losing value fast. Salary not keeping pace. Everything more expensive. Your response? Your precious metals, gold, silver, appreciate in nominal terms, preserving wealth. Your crypto, if held, potentially preserves value. Your real estate and stocks inflate with currency debasement. Your fixed rate debts become easier to pay in nominal terms. Your I bonds tips adjust for inflation, protecting those funds. Outcome: not immune to inflation's impact, but your diversified assets protect you better than holding all cash. Scenario 5. Major cyber attack takes down banking systems for a week. What happens? Banks offline, can't access accounts. Payment processing intermittent or down ATMs not working. Chaos as people can't pay for things. Your response? Physical cash covers immediate needs. Backup cash reserves last through the week. Credit cards might work if their processing isn't hit. Reduce spending to essentials. Wait for restoration. Outcome? Uncomfortable but survivable. People without cash reserves are in crisis. You're not. Scenario 6. Government freezes bank accounts during crisis. What happens? Cyprus 2013 style bail-in or capital controls. Preventing withdrawals or seizure of accounts above certain threshold. Your bank money is trapped. Your response: physical cash and precious metals can't be frozen. Crypto, if you control the keys, can't be easily seized. You have hard assets outside the banking system, can function for extended period while situation resolves. Outcome? Severe scenario, but your multi-layered system means you're not completely locked out of your wealth. Notice the pattern. The resilient system doesn't prevent problems. It prevents problems from destroying you. You still deal with inconvenience, stress, frustration, but you maintain function. You can pay for necessities, you can cover emergencies. You don't panic. That's the goal, not perfection. Resilience. Let's get specific about how you actually build this system. Step 1. Assess your current situation. Add up. Total liquid assets. Cash, checking, savings, easily accessible investments. Monthly expenses. All of them. Rent, food, utilities, insurance, debt payments, everything. Current emergency fund. How many months of expenses do you have saved? Current diversification. How many banks? Any physical cash? Any precious metals or crypto? This gives you baseline. Most people find 90% plus of money in 1 or 2 banks. Maybe 1 month of expenses and savings. 0 physical cash beyond wallet. No precious metals. Maybe some crypto on an exchange, which isn't really your crypto. If that's you, you're vulnerable. Not catastrophically, but vulnerable. Step 2. Build Tier 1, next 30 days. Priority. 1. Immediate access redundancy. Actions. Withdraw $2,000, $3,000 cash. Store securely at home. Open backup checking account at different bank. Online banks are fine. Ally, Marcus. Transfer 2 weeks' expenses to backup account. Verify you have credit cards from different issuers, Visa and MasterCard from different banks. Make sure cards are paid off so you have available credit cost. Minimal. Most banks free with direct deposit or minimum balance. Time. 2 to 3 hours to set up accounts. Get cash. Benefit. Immediate resilience against bank failure or payment system outage. Step 3. Build Tier 2, next 60 days. Priority 2. Short-term reserves diversification. Actions. Open high-yield savings at online bank if you don't have one. Transfer 1 to 2 months' expenses there. Open money market or savings at credit union. Transfer 1 month expenses there. Consider buying 4-week or 13-week treasury bills through Treasury Direct. Cost. 0. These accounts are free and earn interest. Time. $3 to 4 hours to set up accounts and transfers. Benefit. Diversified reserves that earn interest while providing backup. Step 4. Build Tier 3. Next 90 days. Priority. 3. System independent assets. Actions. Research precious metals dealers, APMEX, JM Bullion, local coin shops. Buy a small amount of gold, silver coins. Start with $2,000, $5,000 if possible. If comfortable with crypto, buy hardware wallet, buy a small amount of Bitcoin, Ethereum, transfer to hardware wallet, secure seed phrase. If not comfortable with crypto, buy more precious metals or I-bonds. And cost. $100 for hardware wallet, otherwise just the asset purchase. Time, 5 to 10 hours to research, buy, set up properly. Benefit, assets outside banking system that protect against currency system failure. Step 5, optimize Tier 4, ongoing. Priority. 4, long-term wealth preservation. Actions, maximize retirement contributions, 401k, IRA, build diversified stock portfolio. Consider real estate, if in position to buy, rebalance regularly. This is standard financial planning. Won't help you in immediate crisis, but essential for long-term security. Step 6. Maintain the system, quarterly, every 3 months. Verify all accounts still open and accessible. Check that passwords still work. Confirm 2-factor authentication functioning. Rotate physical cash if needed. Rebalance across tiers if one has grown disproportionately. Update contact info and beneficiaries. This maintenance is critical. A backup system that hasn't been tested doesn't work when you need it. Common objections and responses. This is too much work. It's maybe 10-15 hours total to set up, then 30 minutes quarterly to maintain. Compare that to the time you'd spend dealing with a frozen bank account or failed payment system with no backup. I don't have enough money to diversify like this. Scale it down. Even $5,000 total can be split. $500 cash, $2,000 primary checking, $1,000 backup checking, $500 savings. You're still building redundancy. My bank is FDIC insured, I'm fine. FDIC insurance is real, but access can be delayed. SVB customers were insured but couldn't access money for days or weeks. Backup systems let you function during that delay. This seems paranoid. Having car insurance seems paranoid until you need it. Having fire insurance seems paranoid until your house burns. This is the same concept. Insurance against events that are unlikely but catastrophic. What about taxes on precious metals or crypto? Precious metals. Capital gains tax when you sell at profit. Keep records of purchase price. Crypto, same. Capital gains tax on profit when you sell or trade. Track cost basis carefully. Neither prevents you from holding these assets, just means you need to report properly. Where do I actually buy gold or silver? Online, AppMex, JM Bullion, SD Bullion, reputable dealers. Local, coin shops in your area, check reviews, compare prices. What to buy? Gold coins, American Eagle, Canadian Maple Leaf. Silver coins, same. Avoid collectibles or numismatics. Stick to bullion, expect to pay 5 to 10% premium over spot price when buying. Get 5 to 10% under spot when selling. What crypto should I buy? If you're new, start with Bitcoin only, it's the most established. If you want diversification, 70% Bitcoin, 30% Ethereum. Avoid altcoins, meme coins, anything that promises returns, anything you don't understand. What if the government confiscates gold like 1933? Possible, but enforcement is much harder now. In 1933, most gold was in bank safe deposit boxes. Now you can store it privately. Compliance was voluntary with penalties for non-compliance, but many people hid gold successfully. If you're concerned, mix gold with silver, less likely to confiscate. Store privately, not in bank, consider crypto as alternative. What if internet goes down long term? If internet is down for months, we have bigger problems than financial assets. But crypto becomes useless, yes. That's why you have physical cash and precious metals too. They work without electricity. Isn't crypto going to be banned? Governments can ban exchanges and restrict on-ramps. They can't stop the Bitcoin network itself. It's decentralized across the globe, so they can make it harder to use but not eliminate it. China banned it. People in China still use Bitcoin. Worst case, you can't easily convert crypto to fiat in your country, but you can still hold it and transact peer-to-peer. March 10th, 2023. Silicon Valley Bank fails. Thousands of businesses can't access their money. Some had backup plans, multiple bank accounts, cash reserves, lines of credit. They were fine, annoying but fine. Most didn't. Single bank. All eggs in one basket. No redundancy. They were screwed. Couldn't make payroll, couldn't pay vendors, couldn't function. Same event. Completely different outcomes based on preparation. The resilient system isn't complicated. Tier 1, physical cash and backup bank accounts, covers immediate failures. Tier 2, diversified reserves across multiple institutions, covers short-term problems. Tier 3, precious metals and crypto, covers systemic failures and currency crisis. Tier 4, real assets, property, stocks, retirement, covers long-term wealth preservation. No single tier protects against everything. Together, they cover the realistic scenarios that actually happen. Bank fails. You have backup accounts and cash. Payment systems down. You have physical cash. Currency crisis. You have metals and crypto. Long-term inflation. You have real assets. This isn't paranoia. This is insurance. You don't buy fire insurance because you expect your house to burn. You buy it because if it does burn, you need protection. Same concept, different risk. The next financial crisis isn't coming. It's already here, moving in slow motion. Bank failures, system stress, currency debasement, payment disruptions. These things are happening now. They'll accelerate. 90% of people will be caught unprepared, assuming their bank is safe, assuming the system works, assuming access to their money is guaranteed. Then something breaks, and they panic. Don't be the 90%. Build redundancy now, while systems are working, while you have time, while it's boring and preventative rather than urgent and reactive. 10 to 15 hours of setup, 30 minutes quarterly to maintain. That's all it takes. In exchange, resilience when systems fail, function when others panic, security knowing you have options, cash, crypto, gold, they each solve different problems. Used together, they give you multiple pathways when primary systems fail. Not perfect protection, nothing is, but practical resilience that works in realistic scenarios. That's what saves you when banks don't.